The broadcast is now starting. All attendees are in listen-only mode.
Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Analyst at GDMfx. Welcome to our news trading webinar. Now, today's content of the webinar will be major news and their effect. Subpoints will be the economic calendar, the one that you see on our shared screen. Major United States news. Second point in our webinar today will be news trading strategy, an intro to news trading strategy, support and resistance level, choosing the right entry level. So before we begin, I would like to remind each and one of you, ladies and gentlemen, that whatever questions you might have relevant to the topic of today, I would kindly ask you to put it into the chat so I can answer the questions into the QA session after the webinar itself. Thank you very much for that. Whatever questions you might have which are not relevant, on the other hand, to today's topic, we will still be able to answer each and one of it. Simply put it into an email or yet again into the chat, and I will make sure after the session I will answer each and one of it once more. So every now and then many traders are caught off guard by a big movement on their chart that does not seem to be the result of a chart pattern or any other obvious reason, for example. Now the following presentation, ladies and gentlemen, will show you how to stay on top of such events and make the economic calendar one of your most powerful tools in trading. So starting by what is news trading? Now in order for the financial markets to move, they need two things. Very simple things: liquidity and a reason. Now the key economic news and events that are related by the major economies are the most important reason. That's one of the things that we need. They bring an enormous profit-loss potential and are an integral part of most trading styles. Now that's the second one, liquidity. Right. What we will focus on in our today economic calendar is USA, basically the news that are coming out from US. Those news are popular to have major effect on the market. Now something that you need to visualize, something very important, is the part where we see on the economic calendar where it says volume. Very important to look at it. Now the larger the volume is over here in this section, the higher the volatility of the market can be expected. So breaking down the news, we're interested in only in the most important news, as they attract the most liquidity and cause, of course, the biggest movements on the market. It is very important to follow the rules strictly if we want to be profitable, as this type of strategy relies more on the fact that we make more in our winning trades than we lose in our bad trades. So basically from 100% trading, let's say 10 positions we have, that means more than 5 positions should be profitable and we should be making more money from it. The one thing I would like you to focus on right now is the GDP, or the so-called gross domestic product. Now the gross domestic product is a speedometer of the economy, but by far the most important piece of news for any country, starting by the GDP for US. This is the thing we're expecting tomorrow. Now, the GDP, it is released by the U.S. Bureau of Economic Analysis, showing the monetary value of all goods, services, and structures produced within a country in a given period of time. The GDP annualized is a gross measure of the market activity because it indicates the pace at which a country's economy is growing or decreasing. This is a very important part that you should remember. The annualized GDP, that means on a yearly basis, it is a gross measure of market activity because it indicates the pace of which a country's economy is growing or decreasing. Now, generally speaking, a high reading or a better than expected number is seen as a positive for the United States dollar. While, of course, a low reading, of course, it means that it's negative. Now, the second most important piece of information in the economic calendar is the unemployment data and non-farm payrolls. That is something that we will witness tomorrow. As we can see, initial jobless claims here, continuing jobless claims. This is the second very important part in the economic calendar. Now, those types of news are released almost always in the first, Thursday or Friday of the month, if it's annualized or a quarterly basis. But what we're seeing right now here in the calendar, those types of news for jobless claims are coming out every Thursday. So that's week on week. Okay. Now, the non-farm payrolls, they're released by the U.S. Department of Labor, presents the number of people on the payroll of all non-agricultural businesses. Now, the monthly change in payrolls can be excessively volatile, as we have seen not only once. Generally speaking, a high reading is seen as positive or yet again bullish for the USD, while of course a low reading is seen as negative or bearish for the USD. The unemployment rate, ladies and gentlemen, released again by the U.S. Department of Labor, is the number of unemployed workers divided by the total civilian labor force. Now, if the rate is up, it indicates a lack of expansion within the U.S. economy. Therefore, a decreasing of the figure is seen as positive or bullish for the USD, while an increase is seen as negative or bearish for the USD. Now, this is vice versa from the other numbers that we see. Now, if the non-farm payrolls, if the numbers are higher, they're seen as positive or bullish for the USD, the non-employment rate, it should be decreasing, right? So we can see that the US economy is strengthening, and that will mean that it's bullish for the USD. Moving on to a very important part, that's the core durable good orders. Now, this is usually released in the last week of the month. Core durable goods measures the change in the total value of new orders for long-lasting manufactured goods, excluding, of course, the transportation items. Now, we have two types of core durable goods. One of it is the whole core durable goods, and the other one is excluding the transportation. Because, of course, as we have an example, aircraft orders are very volatile now. The core number gives a better gauge of ordering trends, right? A high reading in the durable goods indicates increased manufacturing activity. What that means is that higher than expected reading should be taken as positive or again bullish for the USD, while a low reading should be taken as negative or bearish for the USD. Now, something that we're actually expecting tomorrow, we're talking about the consumer confidence. Now, it's usually released in the last week of the month. So what we saw on the numbers was a little bit better than expected. Now, the consumer confidence released by the conference board captures the level of confidence that individuals have in economic activity. A high level of consumer confidence stimulates economic expansion, while of course a low reading drives to economic downturn. And to sum that up, generally a high reading is also positive for the USD, while of course, yet again, low reading is negative. Now let's take a look at the economic calendar, some of the numbers that we saw up till now, to see how they appear on the calendar itself, just for us to easily figure out what exactly is happening. Now, what we can see here, ladies and gentlemen, is let's take an example with the GDP for Switzerland. What we can see is higher reading over here, an expansion of 2%. The consensus was 1.9% and the previous 1.7%. Now that's 0.3% expansion year to year. Now this is made on yearly basis, and what we can see on quarterly basis is also summed up over here. We have the actual numbers, the speculative numbers, which is the consensus, and yet again the previous reading. Now those three things are exactly the things that we need to see exactly what the market might do. Yet again, the consensus, that doesn't mean it could be the actual number. That's the one thing that is expected by major investors. It's made a survey by certain companies, and everybody's expectation is averaged and of course made up as a consensus. And as a surprise, we can see negative numbers or positive numbers. This makes you know, everything even more volatile. So while we're talking about the economic calendar itself, now one thing we need to remember, that as soon as the numbers are released, we will be able to see, as we mentioned, all that in actual. The very important column everybody should stress on, the actual number. Now, finally, because before we actually move to the real chart to see exactly how this type of strategy would work for you, we need to derive that we need to be looking at the colors as well on the economic calendar. Now, as you can see, we have a red color here for the numbers that are negative for the economy itself, and we have green color for those which are above the expectation, or of course the consensus. Of course, ladies and gentlemen, once you get a feeling for the US news trading, you can also start following the same principle with other key economic data, not only from the US, let's say Europe, Canada, Australia, New Zealand, Malaysia, Singapore, China, Japan, whatever major economy that you grasp over there, you can, of course, visualize your economic calendar the way that it's going to suit you best. You can filter the news so you can better visualize all that seems important to you and everything that you want to trade with this type of strategy. Now, how to set up our MT4? Let's move to the chart and talk a little bit about how we should set it up. Now, something very important, we can always look at more than one currency pair. No reason for which I have chosen the cable right now, the GBP USD also called. The one thing I have chosen a currency pair which has the United States dollar in it is only because we're focusing on the major economy in the world, which is one of the most important gauges for world growth, of course. Now, what you can, of course, use is 4 different charts aligned on your screen, such as the euro dollar, the USD JPY, the USD Swiss franc if you wish, and as I have done right now, the GBP USD. The recommended period is 30-minute chart. That is why we should switch to 30-minute chart. Now what we can see is bigger volatility on this type of time frame. Yet again, this is something that we're after. Now, in the 30-minute chart, before the news, you need to identify and plot at least 3 support and 3 resistance levels below and above the current price. How to identify the support and resistance? There are a number of ways. We've spoken again in our previous webinars, so many variety of ways that you can, of course, use to find out where are the support and resistance levels. A very easy and very simple way is to observe the chart and mark all the levels where the price had difficulty. This is one thing that you can do. Now, what we will do is shrink the chart a little bit so we can see some support levels over here. The resistance levels are quite clear. We can take one here. You can see the price bouncing off this type of level for quite a while. We have one over here. As you can see, this is a major support level for a current period of time. Yet again, it made it as a resistance level over here. So this is a good point to the upside. Now, below the current price, we have quite a few levels here on the 30-minute chart. You can, of course, expand it to a bigger time frame, as we can see on the 4-hour chart. So we can manage to put a few more lines that are going to do a pretty good job for us. Now, finding those levels is not a difficult job. What you need to look at is where the price had difficulty to breach. So once we're done with all that, we can take it as that we have 3 lines above the current price and 3 lines below the current price. This is what we need to do first before the news are released. Now, support levels is always considered to be, as we mentioned, below the current price, and resistance above the current price. Once more, I have to say that. Some people might not know it anyway, because we've got a lot of new traders coming to the webinars. Now, on the chart, you can see once more time how the price is bouncing off of those levels, up and down. So, once we have done all of that, plotting those 3 levels to the downside and 3 levels to the upside, whatever you want to do it on 2 charts, 3 charts, or 4 charts before the news are released, it's still the same approach. Now, approximately, let's say, 2 minutes before the news, we should remove those support and resistance lines which are too close to the current price. Or, of course, those that have been crossed by the price action in the last few minutes before the news are released. So now we have one here. You can release that, and one here. You can release those 2. So finally, within the last 2 minutes, before the news are released, we need to choose one of the 4 charts or 3 charts or 2 charts that we're actually looking at. We should choose the one where the price is in the middle between the remaining support and resistance lines. Now, once we have chosen that chart, we need to place 2 pending orders. Now, one of it is a buy stop on the closest resistance line. You need to remember that. Buy stop on the closest resistance line, or that should be, let's highlight it over here, okay? And a sell stop on the closest support line. This one should be over here. Those are the 2 closest lines that we have resistance and support. So for both of those positions, we need to be to preset a stop loss of, let's say, 25 pips. That should be appropriate, and a take profit at about 50 to 60 pips. And of course, some of you might, of course, need to set up a how we say it, an expiry date or expiry time if it's the same day. After, let's say, 1 or 2 hours, you know, that's also a good way to protect yourself, simply because sometimes the price is hitting your target, let's say your initial pending order, with just a shadow bouncing off and going the other direction. So you need to be setting up a some kind of a time frame for this kind of you know, pending order to expire. Now that's only a recommendation. Some of the traders don't do that. Certainly, you know, you might want to do that only to protect your investment. Basically, the market is a little too unpredictable, as we're talking about large volumes around the news. Now, once, of course, when the numbers are announced, when we see the news in actual column in our economic calendar, we can delete one or the 2 pending orders based on the announcement itself. Now, the following is very important that you need to understand. Now, if the numbers are green, we're going to mark it as plus for the USD. Okay? Then we can expect the pair where the USD is on the left side. Okay? When we can expect that the pair which the USD is on the left side to go up, and where the pair, where we have the USD in that kind of pair on the right side to go down. And of course, vice versa if the numbers are red. Now, if the numbers are negative for the USD, as we have the currency pair right now, the United States dollar is on the right side, so it is a secondary currency. Then what we can expect, vice versa from the positive news. That means the pair should go up. So, for our convenience, we can enter pending orders directly from the chart. That's something that is very convenient for most traders. They use the toolbars on the top to do so. It's very important to remember you can do that as fast as possible only by right-clicking on the relevant line. Let's see this kind of support line here. Going on trading, you can see buy limit or sell stop, or you can simply go to a new order. Now, going to a new order, you can always choose the market execution, that it's a pending order, and of course we have the type of it, whether it's a buy limit, sell limit, buy stop, or sell stop. If anybody has difficulty by understanding all of those 4 types of pending orders, you can ask a question into the chat, but we're not going to lose our time with things like these unless someone waves a hand and says that he doesn't understand it, so we can go further into it after the session itself in the QA. Now, as we can see, this type of strategy is extremely simple, but of course powerful. The only thing that we need is to follow its rule and let the orders do the work for us. We should once again bear in mind, of course, that this strategy will not have a so high success rate, but we will keep making a net profit for as long as I mentioned earlier into the session, as we're profitable for more than 50% of the time. 6 out of 10 profitable positions will keep us on a net profit, at least. We can of course make them 9 out of 10 or 10 out of 10. Only the gaining of the experience in the future will tell us, of course, how big and how high our success rate will be. Now, this is the basic strategy. To sum it up, something very important to remember, take profit and, of course, stop loss can be only set on a pending order once the order has been activated. So then you have an existing position. Then you can modify it and, of course, modify whatever that you wish over there. If you want to close it partially, if you want to modify the levels of stop loss and take profit, this is up to you. I will give you 3 to 5 minutes to conclude whatever questions that you have, and we will go once more on the chart. Start setting up and finding those levels one more time if you wish. I will see you back here in the next 5 minutes. Hello ladies and gentlemen, welcome back to our news trading webinar. I'm Joseph Novichuk, Senior Analyst at GDMfx, our Central European office. Before we actually conclude to the QA session, I had a very curious question here. It was regarding one of the propositions that we have to our traders, whether they can suggest a topic that seems to be, let's say, a bit more interesting to them. Well, they've been keep asking me whether we're going to add a few new topics to our webinars. Well, I wasn't going to say that until next month. That's actually next week. But yes, we're actually going to add up some new topics. That's going to be a bit more professional type of strategies. So that's not a problem for you, of course, to ask those types of questions. They've been apologizing whether it's appropriate for them to ask. Of course, all questions are welcome, and of course, when you ask a straight question, you will get a straight answer. So far for the new topics, of course, new strategies, more professional strategies, different variety of strategies will be added up next month and the months that follow. Of course, the webinar is not going to be only 2 times a week. They will expand to 3 to 4 times a week. So basically, we're aiming for something as everyday webinar for about an hour and a half, depending on how big the topic is and how much there is to cover. So moving on to the questions, starting with the first question that I've been asked. It's basically about the stop loss and take profit, the ones that I've mentioned. Why cannot a trader actually set up those kinds of levels, before the actual position was initiated? Well, basically, it's the way the MetaTrader has been set up. That's why you have your expiration date. If you're not happy with whether the price is, delaying with, let's say, the movement to the downside, so you can initiate your sell position, or the movement to the upside, so you can initiate your buy position, for example, you might want to terminate that pending order. So stop loss and take profit is pretty much useless to you. Basically, stop loss and take profit can only be set up on an existing position to identify future levels. A very interesting question, a question that I've been kept asking, I've been asked so many times. It's about the volatility itself before the news. Well, ladies and gentlemen, isn't that why we're setting up those pending orders? Those pending orders are set only because the volatility is so big minutes before the news are released, that actually when the news are released, something that it's actually another question that I've been asked, why are actually setting up so many things 2 minutes before the news? Well, obviously because the volatility is so big that the closest levels that we are terminating can be actually hit, and this could be a false alarm. That is why we're doing so many things 2 minutes before the news. And going back to the volatility before the news, as I mentioned, those types of strategies that we're actually talking about in the webinars every week, you can use them before the news are actually released, before the actual numbers, only because everybody knows there is a slight correlation between technical chart and news. Yet again, if the volatility that is expected on such events can actually invalidate most, or should I say, all of the trading patterns, chart patterns or candlestick formations that you see on the chart. That thing can be visible on US GDP expectations, which is tomorrow. Just look at the chart before the news and you will see what I'm talking about. Whatever that you see on the chart, it can be invalidated only with a single move from the investors and their mood in the market. Of course, on the other hand, what we can see on the chart is that the price and the market itself is pricing in for the news expectation. So basically, sometimes news are predictable. There are a few other things that can actually tell us what we can expect, what kind of numbers, whether they're going to be good numbers or bad numbers. There are other types of news from, let's say, from today till tomorrow, that there is something that we can expect with some kind of a percentage of certainty higher than 60%, which we can actually benefit from the market. And you can see that the market is pricing in on the chart, forming type of candlestick formations or chart patterns that validate and they fulfill their profit or loss potential, whatever you're depending on the type of position that you have. Moving on to the next question, I had a question about those types of recordings that we're making on the webinars. That's a question I've been asked at the beginning from one of our attendees today. So he's still not with us, but I managed to answer throughout the session by the chat that we have. So I will tell you guys one more time that whatever recordings we're making, everything is uploaded in our YouTube channel. So you can, of course, review it one more time after the webinar, after we upload it. And if there is something that confuses you, you can one more time request a one-on-one session with us. It's basically only for our existing partners at the company. I will be able to make time for you. The next question is about the stop loss and the take profit meaning. What is stop loss? What is take profit? It is quite simple, actually. So I will cover it very brief, but yet again I will tell you that this is something, all those terms that we're using when we're explaining the market, when we are having our morning outlooks, you can find them in our website. One more time, in the Hermes Academy, you can find it here. And where exactly is the calendar itself, you can either write down the path that you can see on your screen, or you can find it by gdmfx.com/Hermes-academy/trading-central. You can find the economic calendar, from where you can follow up the expectations and the actual numbers about the news. Everything is in our website. Whatever that you need as an explanation from the terms that we use when we're explaining the market and we're leading the webinars, you can find it in the Hermes Academy. Everything is on our education part of the website. Another thing, let's get back to the question of stop loss and take profit. The very simple explanation is the stop loss is where you're actually considering that your losses are big enough that you can actually terminate that position, and it's an automatic process. You can set it up from the chart. Very easy to do that. Everything is in the Hermes Academy. Take profit is the same thing. You set up a level where you're going to take your profit from the market, and you consider that point as the absolute level, regardless of the direction, whether it's up or down, that the price will reach at let's say a certain amount of time that you have been setting up your chart. So basically that's all of the questions that are relevant to today's topic. There are quite a few that are actually not relevant to the topic, so I will engage with those after the session. In any case, whatever questions might pop out on a later stage, you can use our support team to answer a few of the simple questions. Those which require much more attention will be handled by us professionals. So that's pretty much for today's session. Thanks everybody for joining us today. It's been more than a pleasure for me to help you out with the news trading. I do understand it's a little bit too much to digest every week, so use the YouTube channel to watch those videos one more time and refresh your memory about the single and most important key points which we're mentioning every time. Thanks everybody for joining us. I wish you a successful day at the market, and whatever questions you might have, look for us. Thanks a lot. Bye-bye.